Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news mainly on the trade front. Firstly, China is reimposing a banking rule today to help stop the slide in the value of its currency. Ironically, the fall is from market forces rather than the charge of manipulation from the White House. Doubling the irony, today's move is actual manipulation, which should stem the decline. American job growth slowed more than expected in July as employment in the transportation and utilities sectors fell, surprisingly for the transportation sector. But there was a drop in their unemployment rate, which ticked lower to 3.9% because of a stubborn participation rate, which shows no sign of improving anytime soon. Canada's goods trade deficit narrowed from $2.7 billion in May to $626 million in June, the smallest deficit since January 2017. This was a much better result than markets were expecting. More directly in the trade war, China has announced new tariffs on US goods, ones that will especially hurt US hardwood exports and some very fast rising oil and gas exports. The American trade deficit widened in June to its fastest rate since November 2016, pushed by a strong dollar and upfront buying. The trade deficit in goods and services increased 7.3% in June from the previous month to $46.4 billion. It was, however, about what analysts were expecting. But we should also note that the American trade deficit overall now is at its highest point of the Trump presidency and almost as high as 2009. But there appears to be progress in the NAFTA negotiations. The US and Mexico are close to a deal, and Canada says things are positive. Now all depends on whether Trump can accept the compromises involved. US Treasury 10-year yield retreated on the US payroll data outcome and is now at 2.95%, and about where it was at this time last week. Their 2-10 curve is just on 30 basis points. The Chinese 10-year is at 3.49%, that's unchanged, while the New Zealand equivalent is now at 2.83%, also unchanged. And gold was down $2 at the US market close and now just on $1,213 an ounce, another $9 retreat over the week. US oil prices are a little lower today, now just over $68.50 a barrel, while the Brent benchmark is just over $73 a barrel. The US rig count is marginally lower this week. The Kiwi dollar is starting the week at 67.4 US cents. That's down nearly half a cent from this time last week. While the cross rates were lower too at 91.1 Aussie cents and 58.3 Euro cents. That puts the TWI at 71.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.